Continuation bullet. So what is a continuation bullet? Well, it basically says what it is in the name. It's a continuation pattern of a trend. So what we're looking for with a continuation bullet is we're looking for an established trend. And once we have an established trend, then we're looking for that trend to continue. And this is what our setup looks like. If you imagine we have this impulse down, we have a counter trend move now. And of course, what we wait for now is we want to see the trend continue. Now, once we break the most recent low, we then get the information whether we're going to continue or not. We want to see a clear break of the most recent low. Once we then get a clear break of the most recent low, we now know that the trend wants to continue. And once the trend continues, what we have noticed through extensive amount of back testing is that majority of the time we get a pullback to the most recent low here. So for example, as we've broken through the most recent low, we now can see that we have momentum. Momentum has broke that. And what we found is that majority of the time, you will find that when we are with an established trend, we will get a pullback that comes to the most recent low. And this is what we call a continuation bullet. Because of course, we have now broken with momentum, which means that now we have continued with the trend. So by continuing with the trend, we now want to take advantage of that trend. And we know that majority of the time, when we pull back to this area, we normally reject straight away. And we normally have a very small amount of drawdown. We also know that, of course, as soon as we get into this position, as soon as we break this most recent low and the trend continues. So for example, we have a position here. We enter our position where we see the circle and we have our stops above this level. As soon as the trend continues and breaks this most recent low, because of course we have a trend continuing now, what we're able to do is we're able to significantly reduce our risk. Because most of the time, as I said, we normally take the position, and once we take that position, almost instantly it goes into profit. So this allows us to really minimize our risk significantly, because as soon as we break this most recent low here, when the trend continues and breaks that low, we are able to move our stops down to the most recent high here, which of course is very, very close to where we entered, normally around 0.2, 0.3 risk at maximum. Now, the main reason why we do our management the way we do and the way that we move our stops with a trend is because the trend doesn't have to continue at this point. Now, what do I mean by that? Well, as soon as we've broken this most recent low, we're expecting a continuation of the trend. That's why we got into this position that's called a continuation bullet. So we're expecting the momentum to continue going down. Of course, we would significantly reduce our risk, and then we will take advantage of the trend if we're able to get another scale in, whether it be a continuation bullet or whether it be a bunker bomb, whatever it may be, we'll look to take advantage of that. Now, one of the key benefits of the way that we trade is even if, for example, we break this most recent low, we've significantly reduced our risk, but yet the market decides that it doesn't want to continue and it just basically goes up. Now, by going up, it breaks this most recent high, which now means that we are on an uptrend. But what have we done? We've significantly reduced our risk. So when the market does choose that it doesn't want to continue, and as we know, the market can do whatever it wants to do, and it's down to the market's decision and not ours, all we can do is put ourselves in the best possible position to take advantage of that trend. And of course, the most important thing is significantly reducing our risk on that trade. And that's what we do. And normally you tend to find with these continuation patterns, because we have momentum, because we have trend going down and we can clearly see momentum, when we get this pullback, when we get this area that is a continuation bullet, normally it comes down and breaks this low very quickly and we're able to significantly reduce our risk. So of course, no matter what happens, we're looking to continue with the trend, but also we've got the key benefits that allows us to significantly reduce our risk, which is going to help us massively. Now, we also use a continuation bullet in scalings. Now, scalings is very common because, as you know, what we're doing is we're compounding our growth. We're wanting to take advantage of that trend. So majority of the time, you'll tend to see us taking continuation bullets as a scaling, because of course, at that point, we've already seen an established trend. So if you think about it, I'm going to draw one more to the upside. As you can see, the market has come up. We've pulled back. We've got this counter trend move. We're now waiting to see the market break the most recent high. Because of course, once we break that high, we then have an established trend, but then we want to see if that can be continued. Now, of course, we break that high. We see a significant break above this most recent high, which means to us, the trend has now continued. So of course, what we're going to do now is we're going to look to see if we can take advantage of that trend. And by doing so, we will look at, of course, taking a continuation bullet. So of course, what we would do is we would have a pending order above this high. Normally, I put it about 2 pips above, and that's mainly due to spread. Everyone will have to, of course, back test their own and see exactly how they feel comfortable with it. I know there are some people that have it 3 pips above, some people have it at 2, and some people even have it on the line. Now, if you're wondering what I'm talking about, I'm talking about, of course, the most recent high here. Because, of course, sometimes what happens is price will come back down exactly to that level, right? And of course, if it's a pair where you have larger spreads or even normal spreads, sometimes you will not be tagged in because of course it hits that level, but you haven't accounted for spread. So what tends to have happened is some people will have a pending order on the line, on this line here, and what happens is price action comes very close to it, maybe even touches the line, but of course, because you have spreads, you do not get tagged in. And then what happens is the market continues up, and of course, you haven't been tagged in. Now, through my experience with, of course, trading this way, we've come to a decision, well, I've come to a decision to actually had 2 pips above the most recent high or below the most recent low. Now, for me to do that, it allows me to, of course, get involved in every trade, but of course, equate for spreads. So again, this is what we'll be looking for. We'll be waiting for this nice break above the most recent high, and then of course a pullback to this level. Once we get a pullback to this level, we know that it's very high probability that we are going to bounce from this level and continue. That's why it's called a continuation bullet, because of course we know by doing our back testing that the majority of the time it's very high probability that we are going to bounce from this area. We also know that as soon as we broke this high here, we significantly reduce our risk. So imagine we're in this trade now where the circle is, right? We have our stops below here. As soon as the market breaks that high again, as I've shown onto the downside, what happens is you significantly reduce your risk, right? So your risk has come from here, your stops have now gone to around here. So just below break even. Now, what you're doing here, guys, is you're significantly reducing your risk on the trade, but what you're actually allowing it to do is you're now allowing to get involved in the trend. You're allowing the trend to continue because, again, it is a continuation pattern. It's a continuation of a trend. Now, the market, as we know, does whatever it wants to do. All we can do is put ourselves in the best possible position to take advantage of the trend. Now, it's all down to the market, whether it wants to continue. And as I said earlier, one of the key benefits from trading this way is, of course, we are trend traders. We want to take advantage of the trend. So this allows us to scale in and compound our accounts. And by compounding our accounts, we are able to really maximize our reward with minimal risk. Because every time you're scaling in, you're only risking a maximum of 1%. But you may have free trades. You may have free trades running, but we only ever scaling when we have 0 risk on the first trade, 0 risk on the second trade, 0 risk on the third trade. Then we will scale in. So of course, you may have free trades running with 0 risk. Most of the time, they're going to be in profit because, of course, we're in a trend. And then you're going to take a 1% risk. So now you're going to have 4 trades that you're in, but your maximum risk is 1%. And as I said before, because we're trend traders, the first 3 trades that you've scaled into already are already going to be in significant profit. So again, understanding that the way that we trade allows you to really minimize that risk, maximize the reward, which of course is going to be massive, massive benefits because we are trend traders. So as you can see, this is the formation that we are using to get involved in a continuation bullet. Now, one of the key things that I really want to stress here, guys, is that it is called a continuation bullet because we want to take it once we see an established trend. Because again, there are continuation bullets that they happen in range-bound price action. Now, if you think about it, why would you want to take a continuation pattern in a range? We don't want to do that. We want to wait for an established trend. Once we've got an established trend, then we will take full advantage, of course, of the market and be able to compound that growth with minimal risk. So what I'm going to do now, guys, is I'm going to get into some examples on the charts and show you exactly how we're doing it bar by bar, and you can see that in the live market conditions. So here is an example on the Aussie Japanese yen. One thing that I really want to stress to everyone that is watching this video is to make sure that you are checking each and every pair as an individual. As you know that each pair is different to itself and each pair has different pair characteristics. As you know through previous content that we have put out about pair characteristics, we understand that you cannot trade each pair exactly the same. As I've said many, many times, that every single one of them have different pair characteristics and each and every one of them have different setups that fit your plan based on your back testing. So one thing I'm going to do here, guys, is I'm going to explain exactly how we look at continuation bullets with the live market condition. But what I want each and every one of you to do is to make sure that you're thoroughly back testing this before, of course, you start executing it. Because what we want you to do and understand is that, again, each and every pair works differently. And one of the main things that you have to understand is that it is a continuation pattern. So, of course, you want to start seeing an established trend. You want to start seeing momentum in the market. And then, of course, once you see that momentum, it will give you enough time then to actually understand that you want to continue with the trend. And that's why we call it a continuation bullet, because it is a continuation pattern. We're expecting the market to continue. So, of course, what we look at is the most recent highs and the most recent lows to determine whether that momentum is continuing or not. And that will give us our decision of whether we want to be in that market or not. Because understanding that sometimes the market will offer us momentum, it will give us a push in one direction, but that momentum could slow down. And this is why I put out content that says, what happens after an impulse? So again, make sure you're going through all the old content and you really understand what you're looking at in the market. This, of course, is giving you an extra entry. We, of course, use this very, very commonly with scaling in. The reason we use it very commonly with scaling in, because a scaling is what we do when we're continuing with a trend. We're compounding our growth and we're using that to continue with the trend. All right, so let's get into this and show you. I'm just going to zoom in a little bit. So as you can see here, we have a market that just broke the high and then pulling back down. So what we're seeing here is we're seeing an established trend. We can clearly see just by looking at all the price action prior that this is an impulse. This is showing us that now we are seeing commitment and momentum in that direction. So at this point, I'm now saying, right, if we're seeing this momentum and we're seeing this trend, what I want to start looking for is I want to see an opportunity to get involved in this trend. And the reason we do that is we look for a bunker bomb or we look for a bullet. Either one of those two entries we're looking for, because now we are seeing momentum. And as you can see, now we've had a counter trend move. So this candle here is prior. So it didn't break the previous candle's high, which means now it is counter trend. And as you can see, we're just going through. All I'm going to be doing, guys, with this video, just to give you a heads up, is I'm only going to be showing you continuation bullets. There may be other setups that form, but we're only going to be concentrating on the continuation bullet to show you exactly what we're looking at. So as you can see here now, guys, we have broken the high. You can see the most recent high has been broken. And now what we need to do is to determine whether the momentum is going to continue or whether we're not going to continue. And of course, we have to look, if market is going to continue, we will see momentum continue up. If momentum retraces, it gives us an indication that the momentum is slowing down and maybe we'll go to the downside. So again, it's very important that, of course, we look at what happens once we break that high. So again, now what we do is we move that because that's our new high. We then come down and find the most recent low, which of course is the inside bar here. And then of course we wait to see what happens next. Are we going to see a continuation of that momentum or are we going to see a pullback? And as you can see, the next candle did continue. So we can see the next candle had broken the previous candle's high. Yes, it was a red candle, but it's still part of the trend. At this point, we are seeing a couple of wicks. So again, we want to see momentum continue at this point. And as you can see, the very next candle has now given us the indication that momentum has continued. So at this point now, we are clearly seeing momentum has continued. And what we can do now is we can determine where our continuation bullet line would be. And the way you do this is by going back down and finding the lowest point, which obviously we see is this inside bar. And of course, that inside bar would also be the highest point. So what I'm going to do, actually, I'm going to put this line here. Okay. I'm also going to change the color of that to red, or maybe just to a purple color. No, actually, I'll do it to red. Do it to red. And then, of course, it's very easy for you guys to see with your eyes. Now, as I've said many times, when you have an inside bar, it is counter trend to the previous bar and counter trend to the top and the bottom of that bar, which means that is the highest point from that move when it's moving back up. Okay, so now what we're going to do, guys, we have our area here where we have a continuation bullet. Can we clearly see that momentum has come up? We've had a counter trend move and momentum has broke this high and continued. So at this point, I'm very willing and happy to get involved if the market pulls back to this level to take us in as a continuation to go to the upside. And as you can see, start to get the pull back down. And also one thing that we know about the continuation bullet, which is very, very high probability, is that once we have, right, a range, we know that the bullet area, the area where we get the continuation bullet, is normally the bottom of a range. So when we're seeing a range like this, we know that if we come down to this level, it's very, very high probability that the market's going to go here and continue to the upside. We know that because we've done so much intensive back testing. And again, understanding, guys, that each pair you have to test individually to make sure that these sort of setups work on that individual pair. So as we're going forward now, we're waiting for the area to hit that line. At this point, of course, we will have a pending order. So the pending order will be 2 pips above that. So if we look at our line here, we will see that the line here says 83.0002. So we're going to have ours at 82, right? And we're going to have it there, and we're going to have a 12 pip stop on this one. And then what we're going to do, guys, is we're going to now wait for the market to, of course, take us into that trade. And again, all we're doing, guys, is setting a pending order. We're not actually getting involved in a market order. It's a pending order because all we want to do now is wait for the market to, of course, tap us in. We know that that is going to be the bottom of a range. So it's very high probability that it's going to obviously bounce from that level. And as you can see, we have now just been entered into that trade. As you know, with the bullet, one thing that is really good about the bullet is that we can set pending orders, which means that if you're at work, or if you're in bed, or any scenario that happens where you're not able to be by the screen, you're able to set that pending order. And of course, you could have set that way back over here, right? And it could have been 5, 6, 7 hours ago. You have that pending order, you go and do what you need to do, the market takes you in, right? It's completely fine. And that's one thing, one key benefit about having the bullet is that you're able to set these pending orders, which allows you to get on and do whatever you need to do and still be able to execute a trade without being there physically and pulling the trigger. So as you can see, we are now in this trade. As we're in this trade, of course, we now want to wait to see if we're going to break the most recent high. If we break that, of course, it allows us then to start working out, are we going to continue or are we going to come up and retrace and start showing loss of momentum? Again, understanding we are trend traders. As trend traders, we want to see momentum. We want to see the market continue in that direction, and then we want to take advantage of that with minimal risk. So as you can see now, we are continuing. We are on this trade. Again, understanding that once you enter this trade, you are fully accepting the risk. You understand that the market can come down and break this most recent low, and of course, take us out for a 1% loss. Understanding that losses don't matter, because what we're doing, guys, is we're putting ourselves in the best possible position to take advantage of the trend. And now what we're doing is we're letting the market make the decision whether it wants to continue trending or not. Okay, so let's continue with this. As you can see, the market then starts to push up from that level. Still ranging around, waiting to see if we're going to break the high or the low. And as you can see, we've then come down, nearly taken us out. If we actually just move this line, we can clearly see that we haven't been taken out at that point. We are still in. And of course, move that back up. We'll now wait to see, of course, what happens next. And as you can see, the market then continues to break up. Okay, just one quick zoom there. So as you can see, now we are currently in this trade still. We can see that the market has now just broken the high. So by breaking the high, what do we want to do? Well, now we need to move our high up here. We also now need to delete this one because, of course, we've got our trade on. We need to find the most recent low. Most recent low, as you can see, is here. So this has allowed us now to, of course, secure profit, right? So the trade that we're in now, we are obviously going to put it 2 bits below, but it's allowed us to lock in around 0.98, so nearly 1% of that trade. But what we need to do now, guys, is we are looking for continuation of the trend. By looking at, of course, we've just broke this most recent high. We know that. Now what's going to happen? Are we going to retrace to give us indication that we don't want to continue, or are we going to see momentum continue with an impulse? As you can see, we are now seeing the market wants to continue. So at this point, what I'm going to do, I'm now seeing momentum continue. So again, I've got no risk on my first trade. And now I'm looking to get involved in the market again. Why? Because I'm seeing a continuation of the trend. So if I'm seeing the trend continue, I want to now look at getting involved again in a continuation bullet. Now, if we go down and find our line again, come back down to the low, we then come back up to the most recent high. That is now our line. So what we do is we set our pending order 2 pips above that, which would be 9. And of course, we put the 12 pips stop. And then what we're going to do, guys, again, this is what's great about the way we trade, is we just set a pending order, right? Again, we're going to show you every single continuation bullet that we see on this move. And again, you're able then to work out which ones you want to take based on price action. But this video is solely just to show you how we enter and how we get involved in a continuation bullet. Okay. So then as we are going forward, we have our pending order. We now wait for the market to tag us in. As you can see, that candle there has taken us in that trade. And can you see what happens very commonly? As I've said many, many times, is that when you get a continuation bullet, it normally taps this area with very little drawdown and then continues in that direction. So as you can see now, what we have done is we've got one trade here, we've locked in 1%. We've now taken a second trade, which is a continuation bullet. But with the second trade, we're able to have only 1% risk, right? So you think about it like this. We have nearly 1% profit here. We have 1% risk here, which means that we have 2 trades that are net break even, which means that if the worst case scenario happens and the market decides not to continue and decides to come down and take us both out, we're going to be basically around break even. But the kicker is we are trend traders. We look to compound our growth and with minimal risk. So again, every time now we move up and we're making 1%, we're doubling our percentages. So rather than making 1%, we're making 2% because we have 2 trades per, so there are 2 trades on this at open at the moment. So again, we are looking at taking advantage of a trend, but we're minimizing our risk. We never have more than 1% risk on the chart at a time. That's when we're scaling in. But also you can see here that now, because this one is locked in at 1%, we actually have zero risk on the table with 2 trades. So of course, we are now maximizing our reward and minimize that risk. Let's see what happens next. As you can see, the market then continues and breaks the most recent high. So as you can see here, guys, we have now just broken the most recent high. We're able to come down now to find where the most recent low is. Sometimes if the highs are very close, we can look. I don't think that's an inside bar. Just double check up here. You can look, there's a high and a low. You hover over that candle. It tells you 52.8. This one tells me it is 52.4. So that is not an inside bar. So now what I've done is I now can see that this is the lowest point. And as you can see, very, very little drawdown. Again, I got in 2 pips above because as you can see, if you look at that bullet line there, it just barely touched that line and went. So for me, I was able to get involved in that. And as you can see now, I have minimal risk on the table. I have around 1 or 2 pips. Right? I put a stop loss at 12. It's probably around 2 pips on there, which means it's about a 0.1 or 0.2 maximum that I have on the table. But also it allows me now, guys, to, of course, move my stops up on this one, right? So now if you think about it, what I'm saying to you about compounded growth, we've now got on this one here, 2.82% locked in. And this one has a risk of around 2 pips, right? Which around 0.2. So at the maximum worst case scenario, what can happen is price could drop down and of course take me out for around 2.8% on both trades. But again, we are trend traders. We want to take advantage of the trend. We want the market to continue. Now we've just broken this high. We need to wait to see what happens next. Is the market going to continue, or is it going to give me evidence that it doesn't want to continue? And if it gives me evidence it doesn't want to continue, then of course I need to sit on my hands and wait for the market to give me that better opportunity. And as you can see, we've just broke this high and retraced now. So again, we wouldn't be looking to scale in anyway because we still have risk on the table. But this is the sort of scenario that when you break a high here with a wick and retrace, this is the sort of scenario where you've got to sit on your hands and wait patient for the market to continue trending or to come down and take us out. And again, it's the market's decision. But what we have to understand is if we're not seeing a continuation of the trend, we're not looking to take a continuation bullet. All right. And as you can see, we did get this counter trend move, and now we've just broken this high. Again, we now move our highs here. We move our lows to the inside bar. Again, as we go from the top, we come down. The inside bar is counter trend from the high of the previous candle and the low of the previous candle. So this is your high and your low. So at this point, as we've just broken this high, the most recent high from here would be the top of this inside bar. But again, we've just broken this high now. We want to see if momentum will continue. As you can see, momentum has slightly continued here. We're seeing that we've got this nice break. We've also got a continue of that. And what we can do now is we can actually set our order at the top of this bar. Now, again, I'm going to show you every single entry point for the continuation bullet. Now, again, each and every one of you will decide through your own back testing whether you want to get involved in these more aggressively and not. The way that I obviously see this is that, of course, you are in 2 trades that are both locked in. So as you know, right now, this has allowed us to lock in our first trade at 2.14, second trade, sorry. And we've done the first trade at 5.22. So now we have locked in over 7%. And what we can do, depending on the pair, the Aussie pairs, they sort of trend quite correctively. So if we can see the market break, like we've seen here, a nice little break and a continue with that next candle. Yes, we've seen a couple of wicks, but what we're able to do is we're able now to say, right, I'm happy to get involved in another trade here. Because again, I'm looking to take advantage of the trend. I want to see a continuation of that trend. So what I'll do is I'll look to put my entry point around here. We put 12 pips. And again, understanding that if worst case scenario happens and the market takes me out, I'm still going to take a 1% loss on here. I'm going to take a 2.14% win on this one. And of course, a 5.22 on this one. So you'll be net around 6.5% worst case scenarios. But what are we doing? We're putting ourselves in the best possible position to take advantage of the trend, to be able to compound our growth. So when the market starts moving, you're really compounding that growth. So for me, I will be looking to take a position here and of course, wait for the market to tag us in. So as you can see, the very next candle did tag us in, and now we're waiting to see whether this is going to continue or whether it is going to take us out and take out the most recent low. And as you can see, the very next candle did break the most recent high. And this happens very quickly normally when we are trending, because of course we have that momentum. So at this point, we're going to delete this line. We're now going to move our stops to below there. It's around half. And of course, we're going to add 2. So it's probably around about 0.6, 0.7% of risk on that first trade, which is great, right? Because again, we're able to minimize our risk, but also we're able to now extend our profit on the other 2 trades. So as you can see, we are compounding our growth. We are just letting the market do its thing. We have no discretion. Every time that we break a most recent high, we come down and we move our stops up. Now, whether you have a £100 account or a £100 million account, the process is exactly the same. We're not using zero discretion. We're doing it exactly the same way every single time that we do it. All right. So now, of course, we've broken with a wick. We still have around 0.75% risk on the table on this position here. We now have locked in 2.77 on this, and of course, 5.82 on this. So worst case scenarios, we get taken out, of course, for a loss of 0.7 on that. And then, of course, we take the 2 profits on this one. But as you can see, guys, all we're doing is following a very simple process, which is allowing us to extract profit from the market without using that discretion, without using your own personal emotion that maybe can take you in and out of trades without letting the market play out. And then as you can see, the market now has continued to go up. We're continuing again to see the market trending. We have seen the break of this high. Where is the most recent? Well, the most recent here now, because if we come down, we go to the lowest point, we then come back up. This would be now the next place that we're looking to enter. So what we can do again, guys, we could look to enter here if we didn't have any risk on the table. So again, of course, that could be a position you would get into, but as you can see, we currently have risk on this third position. Now, this is something that I really find is very, very important to follow. Some of you may say, oh, it's only half a risk on here, a 0.75 risk on here, and you've got this nearly 8% locked in here. Why don't you just take that risk? Understanding, guys, we are professional traders, and by being a professional trader, you have to follow the rules. And for me, if I have any risk on the table, I am not scaling in. But of course, that would be the level you would scale in if you didn't have any risk on the table, or for example, if you did miss this position, because it's very easy that you could miss this position. And then of course, you would look to, of course, scale in at that point. All right. Now, as you can see, the market is continuing up. I'm just leaving that there. Of course, I'm not going to be entering a trade, but again, you can see where that level would have been to, of course, take a continuation. We're then obviously moving up. And at the moment, as you can see, what we're doing, guys, is we're keeping our risk at the same level. The reason being is because now we are moving up with a trend. We haven't had a counter trend move yet, so we're not able to, of course, lock in more profit and move up with the trend. So all we're doing, guys, is letting the market do its thing. Now, what you're doing, guys, sometimes if you get a high, I can clearly see that that is counter trend. But if you are a little bit confused and you're not really sure, again, check up here. It will give you the facts of whether it's the high or the low. The H is the high, the L is the low. Hang over the candle where the high is. So for example, here where it says high, we can hover over the candle. The high says 18.9. The next candle says 18.2. So you can clearly see that it is counter trend. I just wanted to let any of you know that is not quite sure how to check that. And of course, when we are trading, we have to be certain whether something is counter trend or not. So that candle is now counter trend. Of course, I currently still have risk. So all I'm going to do now is just wait patiently for, of course, the market to give me a better opportunity. Now, as you can see, the market has continued with that momentum. You can clearly see we have an established trend. You can clearly see that the market is continuing to go up. So at this point, we, of course, move our highs And we also are going to move this out of the way for the moment. We now move our lows to this inside bar. Can you see that this candle didn't break the previous low or the previous high, which means it was counter trend. Now, as soon as we break that high, we're able to go to the bottom of that candle, which is the lowest point, and we're able now to lock in the profit that we've been waiting to lock in. So as you can see, currently what we've done is we've now locked in 2.25 on the third position. Now the second position, we're able to lock in around 5.67%. And on the first position, we're now able to lock in 8.77%. And you can clearly see, guys, all that we're doing is we're just doing no discretion. We're letting the management do its thing. And we're letting the market do whatever it wants to do. Now, for me, this has given me a nice clean break. I can clearly see momentum has continued. Now, again, as we've come down, there's an inside bar. So the top of that bar, this would be the low, top of that bar would be the high. So for me at this point, I now have around 2.25 on this one, 5.67 on this one, 8.76 on this one. Again, I want to now look to take advantage of the trend, right? So what am I going to do? I'm going to put my position 2 pips above here. I'm going to, of course, have the same 12 pips. And then I'm going to wait for the market now to give me a position to get involved. Again, the market doesn't have to do that. And we have to think, again, what is the worst case scenario? Well, the worst case scenario is that the market comes down and takes me out. I will take all this profit and I will take a 1% loss. But what am I doing? I'm now getting into 4 positions with how much risk? Well, I have 0 risk. I actually have clear profit of over probably 11, 12% just because obviously the ones that I've done previously and managed them the same way. So now I'm going to wait to see if this will give me the market. As you can see, this is the level of the continuation bullet. It's the area where we're looking to get involved to continue with the trend. But again, we have to wait to see what the market wants to do next. As you can see, the market has continued trending, continued to the upside. So again, very happy to, of course, get involved in that. Now, as you can see, sometimes this is what happens. Sometimes we don't actually get tagged in, and sometimes we don't actually get the opportunity. Of course, we had our pending order there, but as soon as we've broken this most recent high here, we now, of course, remove that order because, of course, now it's not valid. But of course, there was no opportunity to get involved in that position. I'm going to move that out the way again. But again, we now have broken the high again. And now we, of course, have seen that the most recent low is here. Because if we go from the high, go back to the most recent low, we can clearly see it's there, which has allowed us again to secure more profit. So what are we doing, guys? As you can clearly see, all you're doing is just moving your stops up with the trend. You're letting the market make the decision. Over 10% on this trade, over 7% on this trade, over 3. So nearly 20%, well, over 20% on just these 3 trades already locked in. So that means worst case scenario, you're banking 20%. But again, we're not making a decision to close because we're up 20%. No, we're looking to take advantage of the trend. So we're, of course, going to stay involved in that and get involved as much as possible. Now, again, as you can see, we have broken this high. We can clearly see that there is a low here. This would be the most recent high. Again, as I said, I'm going to mark out each and every continuation bullet. Now, whether you take them or not, some people will have a rule through their back testing that says that once it breaks, I'm waiting for a second candle. Some people will be happy to take it straight away. Again, each and every one of you have to do your back testing and make sure that you're happy with how you are taking these continuation bullets. But of course, I want to show you where the positions you would be taking if you were to take each and every one of those positions. So as you can see right now, we did get tagged into that. Excuse me, I forgot to obviously put this up. Forgive me. So again, it would have been 2 pips above that. So if we look at this at 12 pips, it would be 2 pips above that, which is, if I move this out of the way, 41. So we put that at 43. So as you can see, we are tagged into that position. So if we were taking every position out there, we can see that as soon as this, of course, opened the next candle, it then tagged us in. So again, what are we doing now? We're in this position. We have over 20% sitting in profit. We're now risking 1% here. So worst case scenario, that this doesn't play out and it comes down. right? That's worst case, which means you will bank 20% on here and lose 1% here. You are now in net 19% profit. But of course, what we want to do, guys, we are trend traders. We don't have a bias in the market. We want to take advantage of the trend and we want to see that trend continue. So as you can see, of course, we are in this position. We're waiting to see if the market will continue in that direction or not. And as you can see, came very, very close to our stops, didn't take us out, and now has continued in that direction, right? So as you can see right now, we can just delete this entry, excuse me, this line, we can just move out the way. We're able to focus on price action. So now that we have broken this high, we can clearly see we've broken it with momentum. We can see the market has now continued in that direction. And then of course, we want to come down to find where the most recent low is. And as you can see, it's just near enough at the same point where we would have entered, right? So that is where our stops would be. I wouldn't probably move them because they were very close to obviously taking us out. It didn't take us out. So of course, what we're able to do now is we're able to secure more profit. So again, all we're doing is moving our other positions up using no discretion at all. We're just moving them below the most recent low as the trend is continuing. So as you can see here, this one's up 10.67, this one's up 7.62, and this one's up 4.15. Now, what have we seen? Well, now we can clearly see that momentum has broke this high again. So what we need to do is come back down, find the most recent low, and then find the most recent high, which I think is this inside bar here. Let me just check the two highs. 534, 532. So yes, it's this bar here, which is an inside bar. So this would be the area where you could clearly see is the bullet area. The only thing, of course, as I've said, and I've mentioned many times, because I still have a full 1% risk here, I'm not personally looking to scale in. But of course, if you didn't take that trade and you were looking to scale in or you were looking to get involved in it, that would be your area for the continuation bullet because the market's continuing. Now you want to take advantage of that. All right. As you can see, the market now is continuing. We're starting to see some real nice push in the market. And of course, then what we want to do is to just continue up and wait for the market to give us the opportunity to, of course, either secure more profit or, of course, take us out. It's completely down to the market, whatever it wants to do. And all we're going to do, guys, is just wait patient for the market to do that. Now, again, as you can see, I'm not taking a position here. But again, if you was not in this position that I'm currently in, because you may have looked at that and said it broke and retraced, you would, of course, been looking to get involved in this position. Now, again, as I said, each and every one of you will look at the market slightly differently. Each and every one of you will look to take these trades completely differently to each other. But again, they all have the exact same formation. All you need to understand is, are you happy with the price action to take this continuation? So again, if you wasn't in this current position, you would be in the position here. I am not taking that because, again, I still have risk on the table. So as you can see, the market has come down and the market has taken us out, right? So what we've done, guys, here is we can clearly see what we have done is we've allowed ourselves to, of course, be in the best possible position to take advantage of the trend. Now, as you can see, all we've done is let the market do whatever it wants to do and, of course, take us out when it wants. As you can see, by doing a continuation bullet, we saw by each and every entry point that the market was continuing in that direction. Now, as you can see here, the market decided that it doesn't want to continue anymore. It's now taken out the most recent low. Do you see one of the key things here is that we've let the market make that decision? We haven't decided to close any trades. The market's made the decision to close the trades. And of course, we're able to just sit there and wait patiently for the market to do what it wants to do. Now, as you can see, it would have taken me out of this trade at -1%. We would have banked profit on the third trade at 4.15%. We would have banked profit on the second trade at 7.62%. And we would have banked profit on the first trade at 10.67%. So as you can see here, guys, all we've done is we've followed the market, saw a market giving us a continuation of that trend, and of course, being able to take advantage of that. All right, guys, hope that you all understood very clearly on how now to see a continuation bullet. And I hope you all have a fantastic day.